Now, it's fair to say that since I started this business, we've probably helped our readers make over $1 billion. So when something crosses my desk that makes all of our achievements pale in comparison, it stops me in my tracks. This could be an opportunity to make another $1 billion all on its own. This is not a stock, it's not an option. In fact, it's unlike any ordinary investment you've ever seen before. This is a private angel deal. It's reserved exclusively for qualified, like-minded people. Now, we've seen similar deals deliver historic gains. And these are startup companies that no one has ever heard of. I mean, take a company like Nutanix. They delivered their angel investors returns of up to 24,761%. Another company, Lookout, it handed its private investors a return of up to 40,578%. And UiPath's first angels, they saw gains of up to 81,295%. Now think about that. A $10,000 investment in each of those deals would have grown to as much as $14.6 million. That's the kind of potential we're looking at with this new startup today. This startup could soon become an integral part of our entire financial system. It could soon be used by every bank, every trading firm, every financial institution in America. That's because, as we speak, regulations are being drafted that require every bank and financial institution to guarantee 100% privacy, 100% information security. And this small company has built a revolutionary technology that could make that possible for the first time ever. Now, right now, this startup is tiny. It only has a few $100,000 in revenue. Yet just a few weeks ago, they launched a pilot program with a client with nearly $1 trillion in assets. A client we believe is set to pump billions into this tiny startup. And that's just one of what could be many, many more huge clients to come. You'll see all the evidence in just a few moments. The profits here could be life-changing. And look, don't just take my word for it. To dig into the details, I'll be talking to the man who found this deal in the first place. He's one of the most successful angel investors in the world. This is a man who went from working for minimum wage in an amusement park to having a net worth rumored to be over $100 million. The White House recognized him as one of the country's best entrepreneurs. Forbes called him one of the top 10 online marketers. Entrepreneur Magazine called his business one of the most brilliant companies in the world. And on top of that, he's one of the nicest guys you'll ever meet. Now that man is Neil Patel, and he's joining me right now. Neil, thanks for being here.
My pleasure, Mike.
Now, Neil, you've been an angel investor for over a decade, and you've had some unbelievable winners. You were in on WalkScore, which was acquired by the $1.6 billion real estate firm Redfin. You invested in the first round of Remitly. That's about to become a billion-dollar unicorn. One startup you invested in was bought out by Yahoo. Today, your net worth is estimated to be over $100 million.
I don't really keep track of things like that, Mike, but I've made a lot of money investing in private companies. And the startup we're talking about today, they're really exciting. They have a great technology, they're solving a big problem, and their clients have the potential to spend billions with them. So they could quickly become a unicorn. And for reasons we'll get into in a second, that's what I'm hoping for with this deal.
Well, it looks to me like this one will be historic. And I'm curious, before we dive into the details, what is it that makes you so much better than other angel investors?
There are three things that I look for in startups. But honestly, the secret to my success is pretty simple. I have great deal flow. Those are the words I want you to remember.
Deal flow.
That's right. You don't have to be a genius or have a sixth sense to hit it big with angel investing. You just have to have access to the best deals. Think about it. When you get hundreds of deals a year and they're all at least pretty good, you got to be super picky about which ones you invested. You got to wait for the fantastic deals to come along.
Now, someone brand new to angel investing, they don't usually get to see those rare unicorn startups. But amazing deals seem to land on your desk all the time. And that's what we're going to be looking at today. You found one of those best of the best deals for us. So let's get into this. You mentioned that there are three things you look for in a company. Let's go through those.
It's not complicated. First, I look for simple technology that solves big problems. Problems that people are already spending a lot of money on. Second, I want to see that they're actually getting people to buy what they're selling. And third, I look for great founders who have built companies before. If a company has those big three things, there's a good chance they'll become a winner for me.
Now let's take those three factors one at a time. The first one you mentioned is the technology. And this company has a technology that's taken on one of the biggest problems for banks and financial institutions. It's information security. Now, our mutual friend, Robert Herjavec from Shark Tank, he came out and said that information breaches are set to cost $6 trillion by 2021. Now, unless you want to cut up your credit cards, close your bank accounts to live on a desert island, it's been almost impossible to keep your information safe until now.
It's a huge problem. But look, most hackers aren't going to go after you personally. They're much more likely to target a business that has thousands or millions of people's information. And which companies have the most information on the most Americans? Financial institutions. And every time they get hit, it costs them a ton of money.
And you're not just talking about the crime itself, Neil. You're talking about the government fines too.
Yeah, get this. Equifax was fined just over $400 million for exposing the personal information of 147 million people. ING paid $900 million for failing to stop digital money laundering. And a hacker just stole over 100 million customers' information from Capital One. That's going to cost them up to $150 million. The total fines on these companies are in the billions. So they're highly motivated to find a solution, and they're willing to pay for it. JP Morgan, Bank of America, Wells Fargo, and Citibank, they spend collectively over $1.5 billion a year just on cybersecurity. A big chunk of that money goes to outside firms. As an angel investor, I've seen these banks help turn tiny startups into billion-dollar unicorns in a matter of months. Now, not every investment turns into a unicorn. All investments have risks. But believe me when I say we haven't seen anything yet. There are new regulations coming out that'll force them to pay even more.
Now, GDPR is a perfect example of that. That's the European Union's new privacy regulation. On the one hand, they want to keep criminals and terrorists from laundering money. So they're telling banks and financial institutions that they need to collect more and more information on their customers. On the other hand, they're telling these same banks that keeping customer information safe needs to be a top priority.
Right, so that creates a huge problem. The more information you have, the more tempting of a target you become. And it's almost impossible to keep hackers out permanently. Think of it this way, Mike. When you open up a bank account or apply for a loan, you have to submit a bunch of personal information. Your name, your address, social security number, even income statements, whatever it may be. Well, what happens after your account's opened? Does your information magically disappear? Of course not. Instead, banks store it in their computer systems. And bank executives have come out and admitted that they only encrypt about 10 to 15% of non-public information.
So basically, all a hacker has to do is figure out some bank employee's password, and they have access to 85 to 90% of your personal details.
Exactly. And that's a big problem this company was built to solve. They create technology that lets banks verify people's information with 100% certainty without ever having to collect it.
Okay, so instead of the bank having to verify everyone's information, they're outsourcing it to this company. Now, can we talk about how that technology works?
Absolutely. It's probably the easiest for me to just give an example. Let's say you want to open up a bank account. It used to be that you would have to give the bank your social security number, 2 forms of ID, your employment history, and maybe even your birth certificate. Then they had you go through and verify all that information was accurate.
And all that information would be stored in a computer somewhere.
That's right. Now with this company, they can outsource the whole process. You just use this app and scan the documents that the bank needs. The company uses some computer algorithms and some human processes to verify that all the information is true. Then they permanently record that verification on a blockchain. It confirms for the bank that A, you are who you say you are, and B, that you're not any terrorist or on any criminal watch list. Then the company deletes every trace of your personal information from their servers.
So the benefit to the bank is twofold. First, they save time and money by not having to do the background checks on people. And second, because they never collect anyone's information, they're not a target for hackers.
Exactly. And it's even better than that. Because all your information is verified permanently on the blockchain, the more you use this technology, the harder your identity is to steal.
Now, okay, Neil, you've mentioned blockchain a couple of times now. When most people hear blockchain, they think about cryptocurrencies, but that's not what this company is using it for.
That's right. Usually when I hear startups throwing around jargon like blockchain, I tune out. But in this case, it's a really important part of the technology. See, a blockchain is a permanent, unchangeable digital ledger. So it's a little complicated to explain how it works, but basically, information gets put in a highly encrypted block of information. Once one of those blocks is full, it gets duplicated and compressed into a smaller block and put into the next block along the chain. So every new block has all the information of the previous block already inside of it. There are hundreds of thousands of these blocks in the chain. And this chain is copied across millions of computers around the world. So if you wanted to alter a blockchain record, you would have to change hundreds and thousands of blocks all on millions of computers around the world. And you would have to change them all at the exact same time. It's impossible for even the best supercomputer in the world. So once your identity is verified on the blockchain, it's a permanent record tied only to you. The record can't be changed. That makes identity theft virtually impossible.
Okay, so I can see how banks and consumers would benefit from this. But let's talk about the business itself. What's the case here for this company potentially becoming the next billion-dollar unicorn?
Look, Mike, we know for sure that these banks are sick of getting hacked. They already spend billions of dollars a year trying to improve information security. But as long as they're collecting and keeping all that customers' information, there's always going to be someone who finds a way in. We also know that governments are ready to drop the hammer on these banks. These are big multinational companies. So as soon as one big government passes a law saying, hey, you can't store personal information anymore, they'll make the change around the world. And this company has a ready-made solution. They're an easy choice. Of course, I can't know for sure that this is the company that all banks are going to turn to. But here's the thing. Companies spent $58.9 billion on information security last year. That's projected to more than double to $133.8 billion over the next 3 years. So this company really needs to get one of those big banks as a customer. And they almost instantly will be worth hundreds of millions or billions of dollars. With how fast regulations are coming, these banks aren't going to have the time to build their own versions of this technology. So when they see this company sitting there with a ready-made solution, it's an easy decision.
So how close are they to getting that first big bank as a customer?
That's why I'm so excited. They already have a few smaller clients. They've partnered with a small wealth management bank, a couple technology companies, and a crypto trading company. Last year, the startup made about $300,000 in revenue. They're on track to close $1 million this year. That's already better than 99% of the startups I see at this phase. But here's where it gets really exciting. They just launched a pilot program with ING.
It's pretty impressive, Neil. I mean, ING is a huge bank. They have almost $1 trillion in assets.
It's phenomenal. Remember, ING just got a $900 million fine. They're willing to spend a lot of money to make sure that doesn't happen again. If this startup can close any deal with ING, we're talking about potentially hundreds of millions, maybe billions of dollars in revenue. ING's CEO just announced he was pushing ahead with the big ID verification initiative. He said they're reprioritizing their budget around this. Coincidentally, that was around the same time they launched the pilot with this company.
Wait. So ING signs this company up for a pilot program. Then they come out and say that they're making a big push on their ID verification process.
Yeah, it makes me pretty optimistic. But let's say, theoretically, they close a deal with ING worth $100 million. That's just over 33,000% revenue growth right there, just from one client. Once they're in with ING, it'll be infinitely easier for them to sell the same service to other big banks. Mike, there are 28 banks with over $1 trillion in assets. There are 53 banks with more than $500 billion in assets. All of them are big targets for both hackers and now governments. This company has a simple solution to keep the banks safe from both of them.
Now, the numbers look great there, but there's one more factor we have to cover. The third thing you said you look at in a startup you're considering is its founder.
One of my core angel investing principles is to invest in the jockey, not the horse. Because the most important person in the company is a person at the top. A bad CEO can sink even the best startup. And this CEO has been an entrepreneur for years. He's founded 4 startups, and he exited a couple of them for a nice profit already. He's been at the top of 3 different investment banks. He's run a digital advertising firm. His last company was doing $50 million a year in revenue when he left to launch his startup. So he has a deep understanding of finance, operations, technology, marketing, all the things you need to run a profitable company.
Now, you just sat down with him a few days ago, Neil, and from what you've said, he made a pretty good impression on you.
Yeah, one of the things I like to look for is a founder with skin in the game. This founder put $600,000 of his own money into this company. So that means 2 things. First, he can run a company. He's already proven he can get a company to profitability. Second, he's willing to bet a big chunk of cash that he can make this startup work. So he's not just gonna walk away when the going gets tough.
Okay, Neil, this startup has great technology, amazing traction, and a proven CEO. They check all your boxes. Let's get to the exciting part. Just how big do you think this company can get?
I can't make specific projections. It's just not possible. But what I can do is compare them to some of the other unicorns in the space that angel investors got into early on. Okta is a good one to look at. They're an ID verification company. They basically help banks and financial companies prove that their customers are who they say they are. And they offer some basic consumer protections, like 2-factor authentication.
So that's like when you enter your password and a company texts or emails you a second code.
Right, it's basic ID security stuff. Not nearly as secure as a company we've been talking about, but it's a start. Well, they raised money early on at a $36 million valuation. Then they got big financial clients like Ally Bank, Experian, and FICO. Last I checked, they're worth over $15 billion. That's around a 42,000% return for their first angel investors.
So that's the equivalent of turning $10,000 into as much as $4.2 million.
That's just one information security company that delivered that kind of return. We could also talk about Cloudflare. Cloudflare invented a technology that tries to stay ahead of online hackers. They got a couple of big clients like Montecito Bank, BidU, and Karma Insurance. Their early angel investors are up as much as 50,294%.
So that's like turning $10,000 into $5 million.
Or look at Zscaler. They're another web security company. They build firewalls and VPNs to help stop hackers. Early on, they raised money from angel investors at a $10.6 million valuation. Today, they're worth over $10 billion. That's as much as a 98,381% return.
So we're talking about turning $10,000 into almost $10 million. And I want to point out, ING is a bigger client than any of the ones you just mentioned. They have almost $1 trillion in assets. Plus, all those companies are just trying to stay ahead of the hackers and criminals. The company we've been talking about could eliminate these banks as a target in the first place. So their service could be worth even more. And there's another point we haven't gotten to yet. Banks aren't the only customers this company can help. In fact, banks could be just the tip of the iceberg.
Oh, absolutely. I mean, just think about all the companies that could benefit from independently verified information. You run a company, Mike. When you're making hiring decisions, wouldn't you love to know that the people you're hiring aren't lying on their resume?
I sure would. I mean, that's happened more than once.
It happens all the time. According to Inc. magazine, 85% of people lie on their resumes. It creates a huge problem for everyone involved. Back in 2012, it came out that Yahoo's CEO lied about his degrees. He was fired, but the damage was done. It sent Yahoo on almost $1 billion decline. That's a huge blow to a public company, one that you bet they never want to relive. This company's technology could change all of that. Don't you think that most businesses would be willing to pay a small fee every month to make sure that you don't get tripped up by candidates who are dishonest?
I definitely use it.
You and a million more employers. Companies spend a lot of money figuring out how to hire the best employees, and that's just turned a lot of startups into unicorns. Take Zenefits. They're a human resource platform. They're up 11,372% for their first angel investors. Workday is another good example. They make scalable HR software. Their initial angels are now up as much as 37,528%. Or look at Gusto. It's a popular employee onboarding and management platform. Their valuation has shot up 42,599%. And employee onboarding isn't the only thing this technology can make easier and more secure. Here's another place it can be used. Mike, who has more information on people than banks?
That would have to be governments.
Exactly. And they don't like being hacked any more than banks. In fact, Weaker versions of this company's technology are already being used by national governments. The UK has already used multiple third-party companies to provide ID verification for citizens. One of those is DigIdentity. They were acquired by a multi-billion-dollar company, Solera. It was a private deal, but in my experience, that would have been an amazing and a huge win for their early angel investors.
So there are a lot of potential customers for this technology.
More than we can name here. Look, once this technology has a lot of people using it to verify their identity and their credentials, the network effect kicks in. The more people that are using it, the more valuable it becomes to other businesses. So we're quickly expanding from the $133 billion information security industry to the $10 billion HR software industry to the $500 billion from government contracts given out every year, to who knows where. This startup has already partnered with a small wealth management bank, a couple technology companies, and a crypto trading company. The potential market is so big, it's not worth trying to add it all up.
Okay, Neil, let's talk about how much the company is worth. The CEO is using a valuation of $30 million. In your experience, how does that stack up?
Valuation is always tricky. With a brand new company, it's hard to use revenue as a marker. Like I said, any revenue at all is amazing at this stage. So I look at the market size and the company's potential. 30 million isn't out of line with other startups. We talked about Okta earlier. Their first raise was at a valuation of $36 million. They returned over 42,000% to their angels. Nutanix first raised money at a $43 million valuation. They delivered up to 24,000% to their angels. Then there's Stripe, the mobile payment company. Their first round was valued at $37.9 million in valuation. Those initial angels saw returns as high as 59,000%. Square first raised money at $40 million. They're now worth more than $40 billion. That's an angel return of up to 101,000%. So I don't have any problem with the valuation. If they just close that ING deal, that alone could put their valuation over $1 billion. And like I said, once they have that network effect and it kicks in, there's no way to know how big it could get.
Now, Neil, this is the kind of deal that not 1 in 1,000 investors knows how to get access to. They have a proven founder, a proven technology, and great traction in the market. Everything they need to be a huge winner for early angel investors. Up until now, only successful angel investors like you would have had the chance to get in on this early round. But today, that's going to change. For the first time ever, we're going to share the details with a few folks so they can see how to get in on this deal with you. Neil, can we talk a little bit more about how that works?
Absolutely, Mike. Angel investing is like an exclusive club. It's fun, it's exciting. Just being involved sets you apart from the general public. But inside that club, there's another room, a VIP room. This is much more exclusive. This room is reserved for the most successful entrepreneurs and angel investors. So this is where the biggest deals get done. And that's a room that I like to take my private deal flow members into. A group who choose to invest will be investing directly in the company. I'm not a broker, you're not a broker. We're giving you the information on how to access the deal along with the deep dive analysis. We don't get any kind of kickback or incentive if people invest or not. Inside the this is my most intimate group. I'll be spending a lot of time on this.
Now, some of these deals may have a minimum investment, like this first one. Others won't. Some are restricted to accredited investors only. Some are open to everyone. Private deal flow members are going to be seeing a lot of different deals. As a matter of fact, you've brought my team dozens of deals already, Neil. We're analyzing them right now, so we're going to be picking what we see are the best and presenting about 2 new deals every month. That's 24 deals a year, and these are the cream of the crop deals.
That's right. I get hundreds of pitches from companies, and I've already eliminated a vast majority of them before I bring them to your team. That's the advantage of having so much deal flow. And deal flow is what this is all about. It's the 2 words that separate someone who has made millions or even tens of millions of dollars backing startups from someone who's never experienced anywhere near that level of success.
But most investors, even most angel investors, they don't have access to the kinds of deals you do. They never get in on deals like Moderna, Carta, or Palantir.
That's because getting your hands on the best angel deals is not easy. Startups like those are rare and exceptional. Remember, not all the deals I was involved in worked out. There are no promises when it comes to investing in this arena. Even deals that I think are super promising sometimes go belly up. So I would never risk more than I can afford to lose on any one deal. But with those bigger risks come massively bigger rewards. So if I invest $2,000 into 4 companies and it goes terribly wrong on 3 of them, but that 4th deal, it gives me a 50,000% return. Am I gonna cry about the 3 deals I lost money on? Or am I gonna focus on that one deal that made me $1 million? That's why it's always been about and always will be about deal flow. They are. I was just invited to invest in a startup that's patented a new, more effective way and safer technology for angioplasties. This device is cleaning out arteries. And so far in the early testing, it has an 87% success rate on even the hardest cases. The founder sold his last medical device company to one of the largest pharmaceutical firms in the world. And check this out, for $1.15 billion. Pretty impressive track record. He came to me personally and invited me to invest in his new startup. Now, I'm definitely excited about the opportunity to get in on this deal. Medical device companies can take off in a huge way. Just look at HeartFlow. They invented a medical device that gives doctors a more accurate measurement of artery blockages. It's way less invasive than other techniques. Well, HeartFlow delivered early angel investors up to 248,000% return. And this new device isn't just measuring blockages, it's also clearing them out. So the return here could be just as good, which is why I want to share it with my private deal flow members.
Our team is analyzing that deal right now, and we expect to bring it to members of Neil Patel's private deal flow very soon.
I'm also a big fan of collecting dividends from my angel deals. These are hard to come by. I previously invested in a startup that is kicking out dividends of up to 110% per year. And I'm thinking, hey, the founder is going to sell that company for an enormous exit in the future. But get this, he just came to me and said, hey Neil, I'm launching a new startup. Do you want in? Of course I'm interested.
Of course, look at all the money he's already making you.
Exactly. So with this new business, he's buying up small, undervalued cloud computing companies and consolidating them. They're already profitable, but by merging them, the profits can go up even higher. If I invest and you invest, we're helping fund his acquisition efforts. In return, he's offering to kick out a hefty dividend to angel investors. But he doesn't view this as a long-term play. He believes he can flip this for a massive exit, and I believe him too.
My team just finished scrutinizing that deal, so new members will receive all our findings so they can learn how to invest right away if they want. Now, Neil, how do you get so many of these opportunities? How do you get so much deal flow?
Deal flow is something that's usually earned over many, many years. I've got deal flow not just because of my success as an angel investor, but also because of my own companies. One of my firms handles a big chunk of Google's business. I work with Airbnb, Salesforce, Microsoft. There's a good chance that if they're part of the Fortune 500, I work with them too. When many of these executives from these companies go off on their own and launch their own startups, they call me, and I get the first crack at investing in those founders.
Neil is going to bring us these angel deals. Our team is going to put them under a microscope and double check everything. Once we've left no stone unturned, we'll deliver the recommendations right to you. You are getting the first shot at these deals.
A huge opportunity. I'm essentially connecting you directly to my network. My friends are now your friends. My colleagues are your colleagues. So you're gonna see very early stage angel deals you'll probably never see anywhere else.
You're getting the first shot to invest in startups that could have astronomical upside.
Here's another thing I should mention, Mike. I'm always on the hunt for startups that qualify for a unique tax credit. If a startup qualifies, depending on how much you invest, you could receive a windfall of $5 million or $10 million or even $22 million and pay 0 federal taxes on it.
This could lead to generational wealth, and you can take advantage of it right now. Each of these startups could make you millions of dollars. Then next month and every month after, my team will send you the highlights on 2 more angel deal recommendations in our newsletter. These deals have all been personally brought to Neil by the founders of the most exciting startups around. You're getting the first look before the major venture capital firms even catch wind of them. This is the next level of angel investing, which is why subscribing to this is not inexpensive.